This is why we're called smart money concepts. For those who are watching the channel who have not been here before, I mean, we call smart money concepts due to the fact that the chart has multiple setups that are in front of your face that some people see. For example, some people see that this is an SMA, right? So they're like, oh, look, there's basically a support level here. What do we have here? We have a break of support, break of resistance, and then that resistance became support, and then we go forward. So that is like the simple support and resistance. Other people look at this in a more advanced way and they say, hey, look, pretty simple, buddy. We got our impulse, correction phase, and this is our second impulse, right? You had to be anticipating the impulse. Another person would say, hey, we could just look at our SMA and we know that, yeah, we broke above the SMA, we started trading beneath it, but no, we left a rejection, which meant that we were still going to keep on going bullish, right? Other way to look at it also is for us to, let's erase everything off the board real quick, is to say, hey, there's a resistance level right here, right? Let's imagine this candlestick wasn't there before, and then we have our support level. We were in a range, we broke beneath, liquidity grabbed back into the range, and then once we were at the range, we were back at this resistance level, right? This is where price was accumulating. We're accumulating, and then we melt out and come back to that level where we were accumulating. It's the same thing as us, having it's kind of the same thing as, notice I used the word accumulating there. Imagine there's a resistance level here. We hit this resistance, drop, hit this resistance, drop, hit this resistance. Notice how our support level gets higher every single time, right? The reason the Ripple fib is so powerful is because price is accumulating itself towards this area where it doesn't want to break, and then eventually it pops. Same concept. That's the same way I look at the charts whenever I'm looking at the resistance level that it melts out from and then it comes back to. I always tell you guys, we're here at this resistance level for a reason, right? Price is accumulating itself at this resistance level. We're here for a reason. And that's exactly what ended up happening right there, right? That's another way of looking at it. We could also look at it in terms of upside down head and shoulders. We also have a upside down head and shoulders visible. So if we were trading market structures, we could easily try to identify maybe this shoulder, maybe the break of the neck. And if you're a maniac, you could have even gotten it even earlier, but that would have taken a maniac to be able to anticipate, but it's still there. Another way to look at this, at one point in my trading career, I was very, very, very strong on channels and wedges. And what we see right here is at the bottom of this wedge, right? Some might say it's a wedge, some might not say it's a wedge. We could draw it like this. It looks a little bit more wedge-like. We see that we have our, let me see if I could do this touch correctly. Something like this. Point is that we had one touch, two touch, three touches. They say after you have the third touch, 1, 2, 3, it's a break and retest, break, retest, and then from there you should reach the top over here. So this is break, retest, and we are on our way there. That's another way of looking at it. It's descending and ascending wedges. I used to use this as one of my favorite market structures by far. I mean, you have Fibonacci, you have the same wedges within the wedge, which is like, for example, this wedge right here, break, retest, broke right there, retest, and then flew. So within the wedge, you have this one. That's the same thing. Look how it reaches the top of market structure. There's just so many ways to look at the freaking market, and that's why, yeah, no one's really, if you have a good analysis, I don't even know what I was going to get my point to be. My point was going to be, if you have a valid setup, it's a valid setup. It really is considered a valid setup because you've, studied, take the valid setup, use correct risk management. You should be able to be profitable if you're taking enough valid setups. And that is exactly why we call ourselves woke money concepts, because once we actually realize to identify that the market is showing us so many different setups at the same time, that is when you go from trading smart money concepts. That's when you go from trading ICT. That's when you go from trading support and resistance to just trading what we call woke money concepts.